Okay, so it is 2nd of June and new month, and it is the first trading day of the month. I took one trade today. We secured 131 pips for £96 profit. So it's all right trade. We didn't get the full target of the previous daily low because the trade was invalidated after I got a sweep of liquidity here, and on S&P it swept a bit more. I was ideally targeting the London lows, but pretty much on the 3-minute chart you can see we closed above here and then continued back up into this fair value gap here, and then this one here, and then we've just consolidated ahead of FOMC, or Powell is speaking this evening. So let's get into the idea of the trade. So in my last video I was looking at this invest fair value gap on the 30-minute chart just to see what was going to happen, and that was on the Friday. Formed in the PM session. Price traded back down into that on the London session today, and then I wasn't going to trade initially today, but I had my alert set for previous day high and low. Price pushed up above this. I got the notification on my phone, and then we saw quite a quick move down from there, which was nice. A good reaction off that zone. 1 minute inverse fair value gap followed by a break of structure, and I was looking at the retracement here into this 1 minute fair value gap here as my entry, but I wanted just to see what the reaction was going to be from these two candles here. And then this was purely because of the fact that we had this imbalance down here. And then once we pushed down a little bit, I got in. So it could have been an entry in the fair value gap, but I just waited a tiny bit to see what it was going to do. And then from here, I was watching the S&P at the same time, just trying to see what was going on. And we got this bearish move a little bit earlier than Nasdaq, so I was feeling quite good about this trade. Just for the purpose of the model, I always target previous daily low, but we don't always have to go for the previous daily low, which I think is something that I'm going to implement. Doesn't always have to happen. Like if the trade gets invalidated, you may as well take your partials, do what you need to do, just manage the trade, reduce the losses. So I took my first partial around, where do we get out? 21271. So yeah, pretty much both of my, I had two lots on this, and they're pretty much both at the same point, like around this level here, within this fair value gap, as you can see on the 1 minute. That is pretty much the last bit of imbalance. But yeah, we could have come a bit lower. I wanted to see London lows get taken, like I mentioned before, but yeah, S&P swept first this liquidity, and we got a nice push up, which, like I say, invalidated the trade idea. We closed above this down candle here. Let's take these drawings off, and I was waiting to see what the reaction would be into this fair value gap to see if we would then trade back down, but with this 3-minute candle coming up like this, and then this, I was just like, right, let's just secure this, because there is news later, and it's a bit lower probability right now that we're going to take London lows. And And yeah, I just pretty much both of my partials were the same size, same amount of pips basically, maybe short a couple ticks each. But yeah, happy with today's trade. Pretty nice one to start the month off with. Obviously we've not hit full TP, but you know, can't complain with a win to start the month. So yeah, this month I'm mainly looking to be a lot more patient, less trades, only trade when this setup looks on or is on from the model. Trading less red news days as well. Just reduce my risk again, just because sometimes it's lower probability when it's red folder. It can be a bit more unpredictable. And yeah, and take that 131 pips today. So we'll see what happens in the PM session with the with Jerome Powell speaking. See what's going on there. But yeah, you can see here we got a big wick of a candle, so it was looking quite nice, and then we pushed up again. That being said, we also hadn't taken the previous daily high on the S&P, so you know what I mean. It's like one's gone up and the other one hasn't. Just be wary that we could see a further push up because the S&P is likely going to need to take this. And yeah, it's one of those. So in terms of news coming up, so this was today. We had ISM and Fed Chair speaking later. So because this was a bit later in the AM session, this was around 10 AM New York time, I was thinking, yeah, right, this could be where price reverses off this news driver. And then going into tomorrow, got job openings. We got red folder all week. Overnight statement. That's Canadian. ISM again. It's Thursday. Unemployment claims. I mean, that comes out every Thursday, so that doesn't look too bad for Thursday. And then Friday, is it non-farm payrolls? Non-farm employment change. So, you know, we'll have to see what price does, but I'm thinking mainly Thursday will be where I'm looking for the next trade. But yeah, like I say, it all depends on what happens on the day, whether the model plays out or not. And yeah, like I say, happy with today. To be honest, I think that's everything. Sort of been rambling a little bit, but yeah, good stuff. All right, anyway, I'll catch you tomorrow.